Oil prices trading around $100 a barrel. Is this the top for the short term, or is oil poised for another rally? So, Tom, the second revisions to third quarter GDP came in less than expected at around 2%. Is this going to be a drag on oil prices short term?
Well, so far we've seen a pullback of over $1 from where we were this morning with that GDP number. We look for probably that to continue maybe throughout the day, although right now oil has been holding up very well compared to other markets, the equities and gold. So a lot of people are looking for this market to trend higher over the next couple of weeks. We're looking for some draws in heating oil. We've already started to get snow on the West Coast, and the East Coast has been colder than usual over the last week or so. So we're looking for oil to probably stay around $100, even if these GDP numbers aren't as good as people thought.
In terms of the Seaway pipeline reversal, do you expect the spread between Brent and WTI to continue to tighten, which means Brent comes down, WTI goes higher? So we're looking for oil prices well over $100 a barrel right now?
No, actually, most people are thinking that the Brent and TI are going to meet somewhere around 106 or 107. Brent's going to keep coming in, we think, and TI is going to continue to show strength relative to Brent. I mean, that spread was over $23, $24 at one point. Now it's into like 10 or 9. We look for them to meet sometime, probably in January or February, once that pipeline really takes effect.
And what about the fundamentals? I mean, we were talking before we got on camera that you think that Europe is headed for a recession and perhaps even the U.S. What does that mean for oil prices?
Well, normally it would mean we should head a lot lower, but right now with the strength that we've seen in oil, we've kind of decoupled from the stock market and the dollar play that most people used over the last year and a half to trade oil, and we think that that's going to continue. We think we're going to trade on our own, and we're going to remain higher than most people think, even though we probably will go into recession.
What's the support you think for oil?
Oil support, first obviously $90, but really probably 84. If we trade between 84 and 114, that's the range we're looking for sometime in the first quarter of 2012.
So if we're right in the middle of that range, how would you be trading right here?
Very quietly. I mean, the market's been very quiet over the last week or so. I mean, I think I would position myself to just buy the wings. I'd buy upside calls and buy downside puts, $20, $15 out of the money, and just keep them on. I mean, I think both of them will come into play sometime in the first quarter.
All right, so first quarter WTI 114?
I think it could be a possibility, yep.
All right, there you have it. So 114 for oil prices in the first quarter of 2012.